Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. And today what we're going to discuss is how I start the process of finding potential trading ideas. It's interesting that there's three different steps. Well, actually there's four if you really want to. There's first you have your criteria that you go out into the market and you look for particular types of stocks. Then you scan for those ideas or run a screener, whichever word you feel comfortable with. Then from the screener, then you go and determine, do those stocks have obvious order flow? Then the last part is actually reading the tape and what happens between entry and exit as you start to build that argument for the trade. So I've been getting a lot of questions recently about how do I use the scanner? What do I use for a scanner? And I want to make a very, very clear point. After the market opens, I don't look for new trades. When I say for new trades, I'm not looking for new stocks. So I want to make that clear. And I think it's one of the most misunderstood and quite honestly misused part of trading that I see when a lot of new people come into the boot camp, when they realize how easy trading is, or it should be after the market opens, because they're all over the place. They're running real-time scanners for stocks that they've never traded before. And then as soon as a stock flashes to the top of their scanner, they're looking to trade the stock without really knowing the stock at all. So by the way, if you find these videos helpful, if you're getting some value out of them, please click down and subscribe. That would mean the world to me. If you have any comments, definitely leave them below the video. And if you want to trade together in real time for the next 30 days, I definitely recommend considering the boot camp. It's such a small investment for what you get over the 30-day period. And this is just a tiny sample of it. So the point that I want to make here is that once you have your list of stocks to trade, then you go into the market and all you're really doing is looking for entries. That's it. You're not really like driving yourself crazy about which stock should I trade, all of that kind of stuff. All you really do after the market opens, you start to what I call work the keyboard, which is you're really just looking for opportunities that are perfectly matching your trading plan. And then it's really just risk management and leverage at that point. If you're even using leverage, you don't necessarily need to. When I say leverage, I'm really talking about more share size relative to the quality of the idea at that moment. And what I mean by that is you could have the stock in your list that maybe it's right out of the gate in the first hour of the day. If you happen to be a day trader, it explodes in your favor, and maybe the reward potential isn't the same. So you might work that trade a little bit differently if you choose to take it even at all. So I'm going to show you the software that I use pre-market. And again, this is not how I trade. This is how I start the process for looking for ideas when I use a screener prior to the market opens. Especially if you've been with the channel for a while, you know that the screening that I do it on the 7s. I do it 7 p.m. at night to get my head clear after the market closes. I do all my screening, then 7 o'clock in the morning, I just review it kind of like with a fresh set of eyes. If you've ever done any kind of writing, you know the first version you do is horrible. And then the next day you have to go back and edit it. So that 7 o'clock in the morning one is where I go back and edit it. I also get a lot of questions about why do I do it in 2 phases like that. Very, very difficult to make money if you're doing your first scan in the morning. And when I say that is you're putting yourself in a position where you might have a busy morning, and then you're going into the market. You really didn't have the time to really build a plan that you have conviction in. So I highly recommend it, if possible. Everybody's got different schedules. If possible, do part of your game planning at night where you come up with a pretty good list and then review that list in the morning, because you'll be surprised sometimes you're like, what was I looking at? So I'm going to show you a software called FINVIZ.com. It's the version I'm going to show you is a free version. I don't pay for this. They have different levels. There's free and elite. And I want to make this clear. This is only step 1 in my process. This is not how I trade. This is how I find ideas. And it is the culling of stock that meet my criteria. And then I go into a different set of charts to find the trade ideas. So you'll know it's the free version because you're going to see ads popping up all over the place. So trust me, it's the free version. Okay. All right. So let's go over to the charts and take a look exactly what's going on with FinViz. So you can see here it's FINVIZ.com, and this is what their homepage looks like. So very quickly, you can see during the day, you can get a very quick look at what happened with the markets the prior day. I think this is one of the most simple ways to find some opportunities right away. They have this heat map of the S&P 500. So if we open that up in a different window, you can get a very quick look at a couple of things. How strong or weak was the market? How obvious was the market? This is actually a big conversation we've been having in the boot camp lately about, oh my gosh, I lost money this week. I'm not getting what I thought I was going to get. Well, the market has been challenging the last 2 weeks. Sometimes you have to put into the equation, if you want to drive somewhere and it normally takes a half an hour and you're sitting in traffic and traffic's not moving, that's not the car's fault. Look at the market yesterday. Look at how diverse the market was yesterday from a performance perspective. Look at how indecisive the market was from a performance perspective. Sometimes it's not the system. Sometimes there's just not a lot available. However, there were some pockets of opportunity that we took advantage of, and that's the point of doing good game planning prior to the market opening. So you can see Pfizer obviously had a good day yesterday. The banks actually earlier in the day were pretty explosive to the upside, so there were some opportunities. Then you could actually go over here and look the last week, and you can see, again, the last 5 days of trading, not really much better. And here's the point that I want to bring across as well. Most traders, most new people into the boot camp specifically, only buy stock. They don't short sell. So these days that the market and some of the larger cap stocks that were going down, kind of sitting back waiting for better opportunity. So again, not the system. If you have a good system, sometimes it's the market that's tough. And if you think that the market's sunshine and rainbows every day, you're sadly mistaken. That's not reality, which again, that's a big part of learning how to be an active trader in charge of making money over a long period of time. You need to recognize the conditions. So we're going to go back to the homepage, and we're going to start out with what I believe is one of the most important parts. So again, we're not going to get into everything that FINVIZ does. This is specifically devoted to scans that I personally run. So we're going to run over here to Screener, and we're going to take a look at what are my potential scans and how I set up my trades every day. And again, this is based on 20 years of trading experience. And the first thing I want to point out to you, which is incredibly important, to be consistent in the long run, to have absolute conviction. And this is not just my opinion. This is fact for me. This is going back 100 years of trading to all of the people who have written about the market, and specifically as traders. Trading the market leaders, whatever they happen to be at that time, is by far the easiest, most consistent way to pull money out of the market. If you are constantly looking for penny stocks and stocks you've never heard of, it's very, very challenging. I'm not saying you can't do it. I'm saying it's challenging to trade stocks with conviction that are just a flavor of the day. I'm not saying you can't do it. I'm not saying people don't do it. I'm saying it is challenging in a way that will drive you crazy to do that over time, to be consistent. If you have the same goal that I do, which is to be consistent, which is to force the market to make me money every single month, not every single day, every single month, I'm going to show you how I do it. So the very first thing that I do is, and first on this software here, which is a big question, you probably need to click over here, click all, which drops down some more choices. So the first thing I want to point out, and again, this is because I like to trade active liquid stocks. I want to be involved where the smart money is on a day in and day out basis. I need a minimum average true range, which is opportunity, meaning how far the stock can move. And I want a minimum average daily volume, which tells me the smart money's in those stocks on a regular basis. Now you can actually take that a step further and watch yesterday's Stocks for Breakfast video, where I talk about the difference in spotting the candles, even if stocks meet the criteria. So the first thing is my average volume. I'm looking for an average of 2 million shares per day. So you see that just cut off about 7,000 stocks that don't meet that criteria. Now I want to make this clear. I'm specifically talking about day trading and active trading over a 1 to 5 day window. Swing trading you can get away with and feel comfortable with 1 million in that area. But I want to know that there's consistent activity in my stocks. And consistent activity means volatility and volume, meaning average shares traded. Again, these are my criteria. I'm showing you how I do it. You might find a different criteria works for you. But I will tell you, this has worked for me for 20 years, so there's something behind it. Average true range is where the stock trades from low to high. I want a minimum of $1.50. So that means from the low to the high on average, it moves $1.50. So that means I'm going to have opportunity more often than not. So that's my average criteria. So you can see here, we whittled all of the stocks on Wall Street down to 301 stocks in the current market environment. Now, something I want to point out here that's incredibly, incredibly important. Stocks don't wear out. They fall out of favor with the market, and maybe their volume drops or the price drops to the point where you're not going to have opportunity, but you wouldn't be trading them because they wouldn't match the volume and average true range criteria. So volume and opportunity. You can trade the same stocks over and over and over again. It's just a question of which stocks are in play that day that are offering the easiest money because they're obvious and they're following through. And you can ask anybody who's in the boot camp, been in the boot camp, when we make money, we're making money in the same stocks over and over and over again. It's just a question of which stocks out of the 20 or so that are in the list that day are following through and offering the best risk reward for that particular day and for that particular week, for that matter. So now I'm going to walk you through a couple of my scans that I think are what you might call foundational scans. Now, again, this is not how I trade. This is just step one in ideas to consider. Okay, so we broke this down all the way down to my minimum criteria before I even look at a stock. Next, I'm going to show you the criteria, which I have saved over here. But now we're going to look at relative volume. Relative volume is what the stock did today relative to what it normally does. So I'm going to go over here and I'm going to go to over 2. So what this is going to tell me is which stocks out of those 301 that met my criteria traded double their normal volume yesterday. So those stocks are in play. They're active at that point, right? So I'm going to click that, and you can see only 4 stocks met that criteria. So now I would take it a step further, and I'd look at charts over here, and I would work it and see if any of those stocks are breaking out of a trading range, what I call fuel, looking for a new opportunity, or are those explosions in volume happening after a large parabolic momentum move, which I would call exhaustion or capitulation play, which if I happen to be long or short any of those stocks, that's generally where the market turns around. So that's step one. We'd be looking for opportunities in those stocks that would double. Or we actually had a situation about a month ago in DraftKings where the stocks were trading, or that particular stock was trading in a range for about 5 or 6 days on significantly increased volume, which was double normal volume, which means that when that happens in a range, that's also a reversal. And if it happens to be near the high, that is distribution. And sure enough, the stock actually reversed and sold off hard for the following 2 weeks. So a little extra tape reading thing there. All right, so we're going to go back to the screen. So that's how you start out looking for stocks that are in play. Now, what's super exciting is we're going to go back to 300. So again, that's the foundation. Now we're going to take a look at which stocks might have had a large green candle yesterday. And you're going to say, well, how would I know that it's green? Well, if you think about what a candle does, the color of the candle is based on the difference between the open and the close. So a large green candle would have a big distance between the open and where it closed. So if you look all the way over here on FINVIZ, you can see that there's change from the open. That's not net change. That's change over here. Change over here is from the previous close. But if I'm actively trading today, especially if I'm actively trading today, and I'm looking for stocks that are going to follow through tomorrow, or even if I'm looking to swing trade that stock, again, this doesn't necessarily need for day trading. I want to, which stocks had the most attention yesterday? Which stocks had the largest candle, and then we'll whittle it down to in a particular direction. So if we look at change from the open, I'm usually going to sort this by 2%. So 28 stocks had large green candlesticks yesterday, or at the very least had a big distance between where they opened and where they closed. So I'm going to take that a step further and sort this by percent change now. So the stock closed strong from yesterday and closed 2% higher from the open. So this will tell us, obviously, which stocks, and all of it, look at this. All of a sudden, magically now we're looking and finding stocks that are in play yesterday that we could be looking for follow-through. So here's an interesting setup. NVAX obviously has been in play. WIN is in bearish order flow and just happened to have short covering yesterday. So that's a good example there of why this is only step one. This is not actually how to trade. This is just looking for opportunity. NVAX is bullish and we'd be looking to trade for follow-through on that side. WIN is short covering because it's been selling over the last 5 to 7 days. And this is people exiting their shorts and a large green candle to the upside of people getting out of the trades. So you can start to see how the pieces start to come together. Now, to sort this down even further, we could either use moving averages, and let's just say we'll use the 20-period moving average for argument's sake. We'll say prices above the 20-period moving average. So now we just whittled it down to 15 stocks that short-term are strong, meet our criteria, and also were up 2% yesterday. So you start to see how it becomes easier. You're not looking at thousands of stocks anymore. And again, this is just step one, and you start to pay attention to certain ideas. This is the easiest way because we're trading stocks that are liquid, which have attention. We're trading stocks that have volatility with an average true range. We're trading stocks that were super strong yesterday, which, by the way, let's take this even a step further. We now have 15 stocks that were strong, right? So what does that mean? Essentially what that means is we now have these stocks that when the market closed on the lows yesterday, these stocks closed well. They closed strong. So that's kind of interesting if you think about it, right? We have the most immediate signal for relative strength that you can get. And if you're a regular viewer of the channel, you notice about 8 days ago we said Lennar had relative strength to the market when the market closed on the lows, and the stock bounced for the next 6 or 7 days. So you start to see how trading doesn't need to be challenging to find good ideas. Again, there's that last piece of what happens between entry and exit that really is where you make the money. But when you start to put the pieces together and you do this work prior to the market opening, trading becomes 10 times easier because whether you're swing trading and holding a trade for a week or a month, or if you're day trading or actively trading, you're not stressing out after the market opens. You already did the homework. You're just basically sitting back, having your coffee and looking for entries. That's really it. Some days all of them fly off your fingertips, and some days 2 out of 10. You just have to be okay with waiting for the 2 out of 10. All right, so we're going to do the same thing on the opposite side. So if we remove that and we go down 2%, so now we're looking for stocks that met the criteria that had big negative days yesterday. So obviously we'd be looking for a potential short sale there, maybe buy puts if they aren't extended and the premium's not too expensive. So the other one I want to talk about is new 20-day highs that meet the criteria. So I'm going to go over here and we're going to look at new high, just for argument's sake. So these are stocks that meet the minimum criteria and had a new 20-day high. So these are breakout stocks that we're looking to see if we can look for an opportunity that has follow through. So we're going to whittle this down actually even more because follow through and breakouts are one thing. We want to know, did those stocks also close strong? So we want to see, did these stocks close positive? And only 10 did. So we just took 14 stocks off the list. And which of those stocks, if any, closed positive by 2% and only 1? So that's pretty interesting. So you can see Duke Energy actually had a 20-day breakout with a 2% green candlestick, and we'd be looking for an opportunity there. So you start to see how you start to whittle the list down. And generally speaking, I'm usually just playing in this area here, looking for relative strength, looking for relative weakness, and looking for what the market did yesterday. If you want to drill it down even further, they have this section here called groups where you can get an idea of over a week, a day, a month, and look for relative strength and see which opportunities match the way you trade and which criteria. So pretty interesting way to set up the day. I think that if you follow what we're talking about, it's based on a lot of experience. It's based on how to pull money out of the market on a really long-term basis. The biggest revelation I think that you're going to have is, number one, is that you don't need to find brand new stocks you've never heard of every single day. It's just not necessary. And frankly, if you want to have conviction in the ideas that you're trading, you should know the stock. You should learn the stock. When I first started trading, I was trading the same stock for the first 30 days, 60 days. They added a second stock like in the first 60 days. And it meant all the difference in the world because I knew that stock like the back of my hand. So I knew exactly how it traded. We had a question yesterday about somebody asking, how do you know if it's average volume or good volume? Well, you need to know the stock. So that's a big deal too. If a stock has super light volume, it's going to be more difficult to trade because there's really nobody else trading that stock that is pushing it. Smart money doesn't have an opinion on that stock that they're allocating real buying pressure or selling pressure to. When they do, the stock pushes and pauses and stays there. And that's like kind of like a deeper insight into reading the tape. So hopefully this just starts you out on your path of finding ideas. But if I give you no other idea, it's really important that you don't have to drive yourself crazy trying to find new ideas every day. The market leaders are market leaders because they have attention. And if you doubt what I'm saying, I mean, wouldn't you love to trade Apple every day for the last 10 years, 15 years, 20 years? The stock's been in play. Maybe not 20 years, but when I first started trading, Cisco was the most popular stock. in the early 2000 in those couple of years. And stocks fall in and out of favor, but you'll always be able to find them using this basic scan of which are the right stocks because they're active and offer opportunity. And you just keep working your way through those lists. The most impressive, the most consistent traders that I know trade the same stocks over and over and over and over again. And that's what I do. That's what I do because it's 10 times easier. 10 times easier, trust me. Hope this video helped. Definitely leave it below if you have any questions. Definitely subscribe to the channel. You get more stuff like this. And if you want to trade together for the next 30 days, absolutely click down and learn about the bootcamp. I'd love to have you in there and we can interact in real time and do all this stuff where we actually dig deeper and go into the trade setups and actually make trades together. Have a great day, everybody.